European central bank rates may be close to bottoming out, but how will it handle tariff uncertainty? This is Macro Matters, and we're talking about the ECB. One policymaker, Martin Kazak, said this morning that the cutting cycle is almost over. Markets see a roughly 90% chance another cut comes in June, but then expect only one more for the year. The impact of US tariffs on Europe, though, is still very hard to predict. Holger Schmeiding is chief economist of Berenberg. Holger, the European economy is still on quite unstable ground, isn't it?
Well, the outlook for the European economy is, of course, highly uncertain. But we have to say that over recent quarters, the European economy, the Eurozone economy, actually expanded fairly nicely. In the first quarter of the year, despite quite a few headwinds, we had trend growth in the Eurozone. Now the uncertainty is weighing on the outlook. But the good thing about the trade wars by Trump is that the damage for the US will likely be much worse than the damage for Europe. And as a result, we do expect Trump to conclude trade deals and lift some of the uncertainty shortly.
Of course, there's a 90-day pause at the moment on those threatened tariffs on most European imports. But do you think that threat has already done damage in Europe?
The threat has almost certainly done damage. We see it in some of the sentiment surveys. Interestingly, we see it more in services. We see it more in consumer sentiment than in manufacturing sentiment. That looks like a contradiction because the tariffs are, of course, on manufacturing. The explanation is that at the moment, ahead of the tariffs, that manufacturers are already trying to produce in advance. They get some orders in advance. So the hard data from manufacturing and some of the sentiment is actually artificially buoyed by the extra demand to beat the tariffs. But even in manufacturing expectations, we see companies are bracing for some bad news. And very likely, in line with anecdotal evidence, businesses are now holding back from investment until this uncertainty is resolved.
In other words, even if those higher tariffs don't return, should we see weaker growth in the next quarter because demand has been moved forward?
Yes, we had a bit of demand being moved forward into the first quarter, possibly into the beginning of the second quarter. But roughly from now on, we will likely see weaker hard data, so that the second quarter as a whole will be somewhat weakish and the third quarter also be still somewhat weakish. It will take time for businesses after a hopeful partial resolution of the trade uncertainty. It will take time for businesses to step up investment again. So the real big boost again back to trend growth or above should come in the fourth quarter and not before.
Should we be worried then, Holger, about that lower growth combined, of course, with much higher defence spending, leaving governments with very tight fiscal margins in case they need to adapt?
Well, I don't think there is much governments can do and will do about this kind of growth, almost pause that we probably are having right now. Why? First of all, it's probably temporary. And secondly, governments don't have fiscal space. As a result, they shouldn't do it. If the European Central Bank had to do much more than the widely expected cut in June, it would probably do so. I think that with a trade deal kind of likely over the next, say, 2 months, the coming cut by the ECB will be the last one. But just if there is no trade deal, if the uncertainty gets worse, then the ECB would probably continue to cut and cut over the second half of the year. Unlike the US Fed, which has to deal with the higher inflation that's coming from the US tariffs, the US trade policy is disinflationary in Europe. We have more Chinese goods, more domestic goods on our markets, and that would give, if really need be, the European Central Bank the freedom to go beyond the June cut.
You think then that policymakers in Europe have an easier job than in the US?
In a way they have, yes. They do not have Donald Trump as president, which definitely makes life much easier this side of the Atlantic than in the US.
That was Holger Schmeiding of Berenberg. Don't forget, you can watch more videos on Reuters.com.